In this video, I'm going to talk about the bigger picture of how to increase your bankroll. We're going to talk about writing covered calls and selling cash secure puts. Now, this video is about 25 minutes. So if you are someone that has a short attention span, yeah, you're not going to be good with this video. But I do talk about how you can increase your bankroll using the selling premium investment strategy. And I buy all the dividend paying funds that you see on YouTube. But see, the only way you get there is if you generate cash flow. And how are you going to do that? Like, you're working the 9 to 5, man, you're barely making it. How are you going to buy thousands and thousands of shares? Here's the deal. You learn what I teach you in this video, you'll be just like them. So look, take a break. You get about 15 minutes in, you're like, dude, take a break, come back. Because this video talks about how you go from the trade mindset to the wealth mindset, buying passive investments that pay you weekly and monthly dividend cash flow, just like all those people on YouTube. Hey, look, I know you're going to like this one. In this video, I'm going to show you exactly how I made $12,379 just last week. Not this month, not this year, last week. And what I'm going to show you is that you can generate cash flow and then buy dividend paying funds to then give you passive income. You know, the one thing I want you to take away from this video is this. Not the $12,379 that I made this week. Hey, everybody has a different size bankroll. Mine just happens to be bigger. I started 10 years ago, and it took me almost a full 6 months to make $18,000 my very first year. Now, of course, we're better writing covered calls and selling cash secure puts, and now we're generating more cash flow so we can buy dividend paying funds. We go from the trade mindset to the wealth mindset by buying passive cash producing investments. That's the difference between being wealthy and just hitting the 9 to 5 and trying to get by. The number one trend on YouTube right now is buying these high yield dividend paying funds. And what they're doing is they're going out and buying these very inexpensive dividend paying funds, and they buy a lot of shares. And what they love is that weekly and monthly dividend income. But what I'm going to ask you is this. How do you add to that? How do you build your bankroll? Look, I get it, man. The 9 to 5, you gotta parse out money for what? Rent, your mortgage, your cars, dinners, vacations. And there's not much left to buy dividend paying funds. So what happens is you start buying less quality dividend paying funds. Of course, everybody's on YouTube now benefiting from talking about all these funds just to get the YouTube clicks. It's incredible that they'll talk about one of these funds and they'll get 30,000 views. And all they talk about is, well, what if you owned $10,000 on this dividend paying fund? What does that benefit? How does that benefit anyone? I'll tell you what I try to teach to everybody on my channel is we use covered call writing, cash secure put selling, so we can generate cash flow and then we buy a dividend paying fund. Look, it's just like printing money. I've been saying this for 8 to 9 years. You literally go from having no money, you write a covered call, now you have that premium, right? You take that premium, you buy a dividend paying fund. Now you have passive income. This is what I would love for you to learn, because this is going to build your bankroll. See, every single time I write a covered call and have a profit, you can see it on screen. Just this past week, I made $8,600 writing covered calls and selling cash secure puts. And look, we took the majority of that money and bought various different high yielding dividend paying funds. I'm literally in retirement giving myself pay raises every single week because this is what I do. And because we take what the market gives us, we can have our stocks go up and down, and we can sell premium against those shares as the stocks move up and down. I've showed you videos time and time again where I have a stock that has fallen incredibly and I'm down incredibly, but I've sold $57,000 in premium. And what we're doing is we're waiting for the market to ebb and flow, go higher, and we get out at our cost basis. The buy and hold investor made nothing for the time invested, and here I am stacking $57,000, selling premium. Look, it is the golden goose of investing. Why? Because you buy a stock, you write a covered call against it, you create cash flow. Like, think of that for a moment, right? You're at the 9 to 5. You're trying to piece together a couple nickels to buy one of these dividend-paying funds. Well, it's going to be really, really hard. But you can sell premium like we do, generate incredible amounts of cash flow, and then buy these dividend-paying funds. So, look, that's what I'm going to show you in this video. I really hope that inspires you. You know, watching these videos where, oh, what would $10,000 bring if you invested in this dividend-paying fund? How worthless are those videos? See, tell me how I can increase my bankroll so I can then buy those dividend-paying funds and not worry about it. And in fact, the way I do it, writing covered calls, selling puts, we go ahead. That's like free money. I literally bought it with free money, right? And what I do is I put it in. So when these things move up and down, I don't care. And the money comes in constantly. Look at that. Dividends for this week alone, $3,709. Are you making $3,709 this week? Probably not. How about this month? Probably not. But here's what you can do. You learn how to write covered calls, sell cash secure puts, you generate cash flow. You take that cash flow and you buy a dividend-paying fund. You start to build your dividend tree grove, right? You're going to buy things like YMAX and Misty and Alti and XDTE, and you're going to start to buy all of these things. And you're going to have a goal like we do, where we want to have 1,000 shares of each. And what we do, we stay diligent. So what I'm going to show you is this. Right now, here we are. We are talking July 21st. We're definitely in the second half of the year. I am literally off 200,000 from last year. Last year at this time, we were over 400,000. This is incredible, right? But my income is broken down into two things. We have cash flow from selling premium, writing covered calls, selling cash secure puts. Look, if you haven't got that by now, you need to. Google it. Covered call basics. Learn it. Now, the other half is my dividend income. So as I've been able to generate all this money, writing covered calls, selling puts, I buy these dividend-paying funds. And in fact, right now, this would be my dividend tree grove. I have all these dividend-paying funds. They pay me weekly and monthly. So what we try to do is collect 1,000 shares, if not more, of a particular fund. And you can see right here on screen, the yellow ones, I'm not at 1,000 yet. So that reminds me, every single time I write a covered call, we're going to go ahead and put money into that dividend fund. Now, I have upped the game considerably. I'm on margin to the tune of some $2,000 a week coming in cash flow. We do this smartly. Now, some would debate the ETF that I've gone on margin is not smart. But at the end of the day, that's the one I picked. Hell, I picked QDTE, and you would think that was pretty steady. And no, we lost quite a bit of money with that. Luckily, IWMY has rallied to where I have recovered that. My point here is you can get wealthy quicker by writing covered calls, selling puts, taking the premium. Think of that. You generated cash flow. You're in retirement, man. You generated cash flow. You take it, you put it into a dividend stock. You gave yourself a pay raise. Now let's break down the year. 233,000 right now. And I'll tell you, we are going to come in incredibly on the covered call side for July because a lot of my stocks have recovered. And when you have 6,000 shares, 3,000 shares, and you're writing covered calls week for $1, you're collecting $3,000 to $6,000 a week. That's what we do. I do it a little bit more aggressive. But what I'll tell you is this, if you've been watching me, you've been following me, you understand why I use leveraged ETFs instead of any single stock risk. Now, right now, I'm in a couple single stocks only because I'm in those dogs, and I figure, what the hell, if I'm gonna be in them and I'm in it to win it, might as well trade them while it moves higher. But for the most part, you know I use leveraged ETFs to the indexes and the sectors. We're diversified, we get 3x leverage, we get the premiums, and we're still trading the base index. See, when you buy SPY and then you write a covered call, you're buying the S&P 500. But when I buy UPRO and I write a covered call, I'm using the 3x leveraged ETF to the SPY. I make 3 times the premium, and I do not need as much capital because the SPY trades for like $600 and UPRO trades for about $95. I teach a very specific way to do this, But most important, I try to educate that what we do, we generate cash flow and then we put it into dividend paying funds for passive income. And we do this religiously. We do not do this here and there. Now, July is going to turn out to be close to a $40,000 month on the covered call side. I do believe on the dividend side, we'll probably come in at about 18,000. We're growing that number. See, we grow the number by taking our profits and buying dividend paying funds. It's actually exciting. It's like I'm collecting dividend paying funds. It's just that simple. I absolutely love writing a covered call, closing that trade. I immediately buy however many shares that would equal. Now let's go ahead and get back to this week. I'm going to break it down here, but I hope you hang with me. I'm going to show you one of these trades and how it played out. I'm going to show you how I showed the members why I got involved in the trade, how it closed. This is what you get when you're a member. You get every single one of my trades. You see these trades right here? And I'll tell you, that's one of the things that I believe really sets me apart. Authenticity. See, I retired when I was 55. I trade the stock market professionally to generate my income, right? And that's what I do. So when you're a member and you see every single trade that I do, these are real trades that I've done and I'm doing to pay for my lifestyle in retirement. We don't mess around. Hey, the bills don't stop, man. The Visa bill's coming, right? Your vacation bill is coming. I just went on a cruise, probably cost me 15 grand. Look at this. I literally paid for the cruise in 1 week. 1 week. Actually, last week, look at that. 13,600. That's not even my biggest week. I think last year I had a week of something like 19,000 in a week. And I'll tell you, one thing that I do is I take my profits. We pay the tax man. A lot of people ask the question, how do you pay the taxes? Do you account for taxes? Of course, these numbers are all gross, but here is the deal. See, last year I got stuck with a big tax bill. We worked through it, paid it off, but it sucked because the taxes were due right when the market crashed. Well, we aren't messing around anymore. So when we have a profit, we pay the tax man with my tax bucket idea. Members see this all the time. Anytime I close a trade for a profit, they see that I pay the tax man, right? It's my tax bucket. If you haven't heard of that, that's what we do. Then I take the rest of the profit and buy a dividend paying fund. I think it's those basics that I teach. And not only do we teach them, it is every single day. See, I trade here from 7 a.m. to 11 a.m. and that's my day. How cool would it be to be in retirement and literally show up at 7, put in a couple trades, and do whatever you want. And know that you're knocking down income, writing covered calls, selling cash secure puts, buying dividend paying funds. So what if you can't trade, right? What if you can't write covered calls or sell puts? You still have the dividend side coming in. And you know what? If you're like me, I don't use all that money. My monthly expenses are not to the tune of $3,700 a week. So what do? I'll pick a random week. It's random. I pick a random week, and maybe it's this week right here. I'll go ahead and buy $3,700 worth of my Dividend Tree Grove. You pick one, I'll do it. If it's in yellow, I'll do it. So that's how you build wealth. You go from the trade mindset to the wealth mindset real quick. Look, in the description below, you got your 1 free month offer. I teach people how to build their bankroll. I teach people how to generate cash flow in retirement. I teach people how to then take that money and buy passive investments. And look, even if you don't buy into what I'm doing, you see me do it. It's like a wheel. That wheel doesn't stop. And I'll tell you what, I highly encourage you to up your game and really look at where you're at. If you can write covered calls and sell put, that is going to amplify your chances to buy more dividend paying funds. So let's go ahead and get to this. In the description below is your 1 free month offer. Follow me, join me, because not only do I show you all of my trades, and that's how it is. And you'll check the phone app, you'll get your email and the blog post. I do this every day. Oh, the exclusive videos where I show the members exclusive content you don't see here? Well, you get that too. So getting back, $8,600 in covered call profits, did not have a loser. One thing I want to highlight for you, a lot of times people ask me, why do I buy back my options? Now, what I want to tell you is this. What I've learned over the years is that we're trading the stock market. That's a tool in the toolkit. You know, a contractor has to build a fence, right? So the fence is the ultimate goal. I want to make profits in the stock market. So I'm going to use stocks to get there. that contractor is going to use tools in his toolkit to finish that fence. So what we're doing is we're using stocks to get us where we want to be. But the reality is what we do is we sell time. If you're selling premium, we are selling time. If you are buying dividend paying funds and you're interested in what I'm saying, the reality is you bought time. That's what you did. You bought time. When you bought Ulti for $6.50 and you're waiting for that dividend to come on Friday, you bought time because Ulti's going to pay you off on Friday. So I buy and sell time when I sell premium. So in this column that's red, this is my buyback. In this column is the covered call premium that I collected. And then as the trade moves on and that covered call premium that I received starts to decay, right? Because remember options, they decay as we get closer to expiration. Well, we go ahead and take that risk off the board and we move forward to the next week. Remember, we buy and sell time. So if I'm closing this on the same week, that gives me time for the next week. So if I'm collecting 70 to 80 to 90% of this covered call premium, and then we're able to write another covered call for next week, and we've tacked on a couple extra days, well, our premiums are going to be higher. We take what the market gives us. Look, I never said that you're going to get rich quick. We get rich steady, and we get rich right. That's my approach. And when we do this time after time after time, we're generating this kind of profit. And of course, we take this profit and we buy dividend paying funds to generate this profit. And of course, if we have any left over, we buy more. I'll tell you, it's the golden goose of investing. I need you to learn covered calls, cash secure puts. I have videos on every topic you can imagine when it comes to selling premium. A lot of people are apprehensive, right? But yet these same people are out there buying these dividend paying funds and they don't really even know how they're deriving their dividend. Well, they're deriving their dividend by writing covered calls on the underlying. And of course, that's how they're generating all of those profits. Well, what if that was you? What if you were writing covered calls? You would collect all of that premium and then you'd roll it into the covered call funds. I'll tell you one last thing. This is the most beautiful thing. I'm giving myself a pay raise every single week. I'm in retirement, man. I'm giving myself a pay raise because this money here goes in the wallet and then it buys dividend paying funds, which increase my shares. And when I increase my shares, I'm giving myself a pay raise. This is absolutely money. Learn it. Join my membership in the description, cptdashboard.com. Click upgraded dashboard. So let's take a look here. We used MicroStrategy, Yin, SMCI. Now you're seeing the 2X leveraged ETF because if we're going to use MicroStrategy, why not use its 2X leveraged ETF? Doesn't make sense to me. People will spend all of that capital, man, $435 for 100 shares of MicroStrategy. Why don't you just buy SMCX, which is trading in and around 44? It's the same risk. SOXL, we have many shares of that. Again, we don't have to use 8 different stocks and take on 8 different risk levels. We're just going to go ahead and use these leveraged ETFs time and time and time again. Let's take a look at last week. Here we are making $12,000 this week. How about last week? What do we got? We got SMCX, TNA, SOXL, LABU. That's the 3X leveraged ETF to the S&P 500. Pharmaceuticals. Love that because you have high volatility stocks inside of a 3X leveraged ETF. I'll tell you, LABU is the play. Absolutely love that. DPST as well. And again, we use Bitcoin. We use BitX instead of Bitcoin, and we sell premium against it. We are not going to find ourselves in Robinhood or some of these others. That's an easy trade. You're buying time, right? You buy them and you get paid at the end of the month. Tell you what, if the stock doesn't recover, then that is NAV erosion, and that's not good. Here is your fix to NAV erosion. Because at the end of the day, man, you're going to spend that money. You got to live the good life, right? Well, if you wrote covered calls and you pump the profits back into those different dividend funds, well, of course, you're reducing your cost basis and you're getting more of a monthly return. This is what I teach people all the time. If you want to be a part of the membership, you know where to get it in the description below. Let's pick one here. We're going to talk about SMCX, where we made $1,100 trading at 50.90. We wrote the 45 cash secure put strike. We got $1.40 for that. And it looks like this wasn't but a couple-day trade. In fact, it was a 5-day trade when we started it. I closed it early, only 3 days. That's incredible. Made $1,150 in 3 days. Now, I hope I inspired you to this point to start looking at covered calls and cash secure puts. That's going to truly build your bankroll. And then you're going to be able to buy all these dividend-paying funds. Look, if you make a $100 profit, $200 profit, you could start buying Alti and YMAX and XTTE, and you do it in small shares. And then you drip those, and as you're writing covered calls and selling puts, you're just buying more and more shares. See, that's how you're going to get wealthy. This whole idea that you're going to buy dividend-paying funds with your 9 to 5, right? The little bit that you get from the 9 to 5, right? You're just not going to get there. You're not going to get where you want, and you're on YouTube watching all these people out there just making it sound like they own 10,000 shares of this, that, and the other. You feel behind. Well, this is how you get ahead. So let's go ahead and talk about SMCX. This is SMCI 2X Leverage ETF. When I put on this trade last week, we looked at the 45 strike. And I teach this to my members all the time. We always give ourselves downside protection. And there's gaps that are going to be filled. I show the charts all the time. I do exclusive videos. Now, when I put this trade on, it is trading for in and around 50.90. I know I'm being a bit conservative here, but we're going to go ahead and select the 45 strike. And that's going to give us downside protection all the way down to here. Now, there's a reason for that. I show the members all the time why we use the 45 strike when it's trading at $50.90. And it's very important to understand your good entries. I just did a video, stock chart reading, know when to buy. Thing got like 800 views. Do you understand? That video right there will literally escalate your trading from amateur to pro real quick. And it's about your entry points. Because just last week, I closed one of my daughter's trades. She actually was in LABU. It was trading at 66.90. She did an in the money 66. LABU was trading at the top of the range. And of course it fell. What were you seeing where you're going to get involved near the top of its range and not give yourself any downside protection? Well, didn't want to embarrass her. Didn't ask the question. What I did is I went in, I bought another 100 shares for her. We went ahead, reduced our cost basis to 63, and of course, the 62 strike is where she should have done that. She should have done the 62 strike. But see, there's reasons for this. That's what I teach my members, and I want you to learn from my chart reading experience. So let's go back to SMCX. And if you remember, I told you I got involved when it was trading at 50.90. We gave ourselves that 45 strike. That's downside protection. So we put on the one trade, made $1.40 for this. And when I put on a trade, I dial up the next trade. If this were to fall from here all the way down to 45 in that 1 week, well, we already have the cover call dialed up as to what we're going to do. That's where amateur traders find themselves in bad spots because they got involved at 50.90 and they thought it was a good entry, and now it's trading for 45. So what do? They don't look at the screen. They're going to wait for it to go higher when we can write covered calls. See, when we do this trade, we're in at 45 and we collected $1.40. Now it trades for 45. We do an at the money 45, can collect in and around $3 to $4. 2 trades, knock it out, have our shares taken away. That's how we do this. So I'm going to highly encourage you to click the description below. I want you to get your 1 free month offer. I don't know if you'll ever make $12,000 a week, but I'll tell you this, you got to start somewhere. And I did some 8 years ago, did my very first trade. PSX, had 100 shares, wrote a covered call. That's all it took. I didn't know nothing about writing covered calls. Now, my mentor taught me, but I was apprehensive. I was scared. I thought I was going to mess up. But once I learned it, I have never changed how I trade. Hey, take a look at this. I'm going to show you something here that might inspire you. This is from 2016. I hope you can see this on screen. 2016, we made $18,000 in the first year. That was only 6 months. And we continued to grow our knowledge and experience to the point now where we are incredibly generating cash flow. And notice the dividend side as well. We are generating almost $200,000 a year in dividend income. So since I've been doing it, since my very first trade, PSX, I can even bring up the trade. I saved it. I've generated $1.5 million in covered call, cash secure put profits and dividend income. This is how you grow your bankroll. And I'll tell you what, I'm your best opportunity to get you there. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.